Hello everyone and welcome back to my channel. In this video, I'm going to share with you 5 factors, 5 confluences that will make a market structure shift a high probability. I believe the majority of ICT traders use the MSS as a condition to take a trade, yet often fail to identify the real one. I promise you that after watching this video, you will no longer face that problem again. You will also be able to avoid many unnecessary losses and increase your win rate. All you have to do is pay attention and take notes along the way. So if you are interested in that, stick around until the end and don't forget to hit that like button and subscribe to the channel so you won't miss any upcoming videos. And let's get started. Now the structure of this video will be as follows. First, I'm going to give you a quick refresher about the market structure shift, explaining what it is and the properties that define it. Next, we will move to a live chart example where I will show you the 5 confluences I look for whenever I want to take a trade, along with the logic behind them. Once you understand the logic, you will be able to identify them on your own. So this lesson will be purely practical. Now let's start with the definition of a market structure shift. I'm going to define the market structure shift and the properties of a market structure shift. So what defines a market structure shift, right? So we have a visual example right here. For example, we have a bullish structure, right? And then we hit some kind of a point of interest. For example, a PD ring, right? A swing high, an order block, fair value gap, I don't know, anything, a breaker block. And then you want to see a displacement leg to the downside, right? A displacement leg, and then retracing to here, maybe 50% or premium, and then continue lower. So this how a market structure shift looks like. Now, what are the properties of a market structure shift? First of all, the first thing is the displacement leg. You see this displacement leg right here? This has to be energetic, all right? Now, how do you know if it is energetic or not? You will see big candles. So if you compare the size of the candles right here and compare them to this, the candles of this structure right here, you will see that the candles are twice or thrice the size of the candles here. So this is how you know that this is energetic. Displacement must be energetic. The second property is breaking a recent swing, a recent opposing swing right here. In our case, this swing right here. We need to see a break of swing, right? This is the second property. The third property is we want to see fair value gaps here, right? We want to see fair value gaps. Now, why do we need to see fair value gaps on this displacement legs? Fair value gaps are inefficiencies, meaning that the market makers on this move right here offered only sell side liquidity. So we have an imbalance in price, right? We need to offer a buy side liquidity. So when price offers only sell side liquidity, so you know that this is an energetic movement. It didn't give the chance for buyers, right? So only sellers right here. So it needs to rebalance that inefficiency, right? And then continue lower. So these are the 3 properties of a market structure shift. These are not the confluences, right? These are not the confluences that I want to look for. If you don't have these 3 properties, right, you don't have a valid market structure shift. And now let's move on to the confluences, to the 5 confluences that will make this market structure shift high probability setup. So when price reaches this area right here, you know that there is a high probability of continuing lower and not just violating this swing right here and hitting your stop loss. And now let's start with the first confluence with the live chart example. Now, before we dive into the lower time frames and show you how high probability market structure shift looks like, first of all, I want to give you the context. So let's start with the 4-hour chart and on the Bitcoin chart, right? So the 4-hour, we have hit this fair value gap right here, internal range liquidity. And after taking internal range liquidity, we want to target external range liquidity, which is this failed swings right here, all right? So our next target. And now after we have the buys on the 4-hour of going lower, now we will go to the 15-minute chart. and look for a change in the order flow. So time frame alignment. So on the 15-minute chart, we have this market structure shift right here. We have the fair value gap, displacement leg, all right? Return to the fair value gap. This is what? Internal range liquidity. So after price taps into this internal range liquidity, our next target should be external range liquidity here. So this is our next target, right? We don't want to target those external liquidity on the 4-hour chart based on an entry on the 1-minute chart or the 15-minute chart. So please pay attention to what I'm going to say here. We are targeting this external range liquidity, right? I mean, you can hold your trade leave runners all the way to the target on the 4-hour chart, but this is your choice. So on 15-minute chart, we have this structure. Now we go to the 1-minute chart when we hit this internal range liquidity. And here on the 1-minute chart, what do we have? First of all, let me just remove this. So we have a return to this point of interest, internal range liquidity on the 15-minute chart, right? And now we wait for a change on the order flow. So the order flow of the 1-minute chart is bullish, as you can see, right? From here to here, we have a market maker buy model. So now we want to anticipate a market maker sell model to target this original consolidation, right? This is the second accumulation of longs. So these are low resistance liquidity. This is our next target. So now we wait for that market structure shift to happen. So, and here is the market structure shift. Here's it happens, right? So this is a real market structure shift. And now let's start with the first confluence of why this market structure shift is a high probability. The first confluence is, pay attention, the displacement leg must break the swing low that created the higher swing high. I repeat, this displacement leg must violate the swing low that created the higher swing high. In this structure right here, where is the higher swing high? This one right here. Yes, this is the higher swing high. This higher swing high, right? Where is the swing low that created this? So you go back to the left, right? And here it is, right? This swing low created this swing high. So when you have a market structure shift, a displacement leg, you want to see this swing low get broken, right? And this is a bearish example, and vice versa on the bullish example. Some of you will consider this as a market structure shift. Now, this can be a market structure shift, but when the displacement leg break this swing right here, this will make it automatically high probability, and you know that this is a change in the overall order flow of the 1-minute chart. So after breaking this swing, there is high probability that price will turn bearish on the 1-minute chart. So this is the first property. Again, you want to see this displacement leg violates the swing low that created the higher swing high. For example, here, right? This is called the manipulation leg, right? This is called the manipulation leg highs. When this manipulation leg get violated, there is a high probability again to change the order flow on the 1-minute chart. Now, the second property is this displacement leg must close the candle, the bodies of this displacement leg must close below this swing low right here. For example, here. So as you can see, that this candle, right, closed below this swing low, and this is what we want to see, right? As ICT always says, the bodies tell the story, the wicks do the damage. So you want to see a candle, a body candle, close below that swing that created the higher swing high, and this is a second property. So for example, if you see this displacement leg violated this swing low with only a week, then I wouldn't count that as a high probability market structure shift, right? So this is the second property. And now let's move to the third property, which is a sweep on liquidity, a sweep on opposing liquidity. For example, this right here, as you can see, this displacement leg, before it happens, we have a sweep on liquidity. Now, why a sweep on liquidity considered a confluence for price to retrace to here and never reach this swing right here? And the reason is we have already took liquidity from here. We have already stopped traders who wants to go short, right? So there is no reason to go all the way here and take more liquidity, because this swing right here already took liquidity. This is called high resistance liquidity run, right? For example, price will face resistance to go all the way to here. Why? Because price, as I told you, price seeks for liquidity or seeks for imbalances in price. There is a lot of liquidity here, right? But here we don't have that much of liquidity, right? So price will seek next for this liquidity. So this is called high resistance liquidity. This is called low resistance liquidity, failed swings out here. So you want to see a sweep before a displacement leg. A sweep meaning there is high probability of price will never come back to here, right here. So this your stop loss must be here, and it is absolutely safe. And if price wants to go all the way to here and violates this swing right here, this is high probability of price would just go up and never turning back down. So this is a third property of an A+ market structure shift. The fourth property of an A+ market structure shift is a key level. What do we mean by that? We want to see this structure right here. This structure happens on a higher time frame key level, a point of interest. In our example, we have this 15-minute fair value gap. So by itself, if we go to the 15-minute chart, there is some kind of probability of going down, right? From that 15-minute chart without this structure. Now this structure right here on the 1 minute will make that move on the 15-minute chart to the downside even more probable. So the fourth property is we want to see that market structure shift, that sweep on recent liquidity, right? Recent swing high, violating the swing low that created the swing high. We want to see that forms on a key level. It could be a 15-minute fair value gap, right? So it is based on the time frame you are operating in. For example, if we are operating on a 15-minute fair value gap, so imagine this structure, these candles are 15-minute chart, right? So you want to see that point of interest would be a 1 hour, for example, a 1 hour fair value gap, or a 1 hour order block, right? Or a breaker block. So that is the fourth property, a key level. The structure must happen on a key level. And now the final and the last confluence, which is target. Guys, you need to have a target in mind. So when this market structure shift happens, you want to see a reason for why price must balance this imbalance side here and continue lower. In our example, we have all this consolidation side here. This is called a low resistance liquidity. So price has a reason to go down. Price seeks for liquidity and balancing imbalances. We have a lot of liquidity here, and we have also that for our failed swings, right? So we have a reason to go to here. Without a reason, without a target, you don't have a trade idea, right? So as you can remember on the 4-hour chart, we started our whole analysis by a target, which is those failed swings on the 4-hour chart. So the target is the most important one. And when you have this kind of a market maker buy model, so consolidation here, original consolidation, and the second accumulation, the property of this market maker buy model is low resistance liquidity. Price will gravitate toward this price right here, this level right here. Thus, we have high probability market structure shift, right? So we have come to the end of this video. These are the 5 confluences that will make your next trade using market structure shift high probability and A+ setup. If you have any questions, guys, please DM me in my Twitter account or leave a comment down below and I'll answer you as soon as I can. Happy trading and good luck.